One of the most common questions we get asked every single month is, should I buy my own home or an investment property first? This is such an important question that we've all got to answer as investors or homeowners in the future, which is why in this video, we wanted to talk about some of the pros and cons of buying your own home, as well as the pros and cons of investing first. So to kick things off, what do you like about buying your own home first?
To be completely honest, I have no real agenda. I don't really care if someone buys their own home first or invests first. It's really a personal decision at the end of the day. But what I love most about buying your own home is the fact that it's yours. You don't have a property manager coming around once every 3 months to look in your cupboards and check whether or not you've been looking after the property well. So you don't have that, person coming in. You've got more privacy, which I think is really good. You don't have to pay rent to a landlord as well. So that's money that you're saving every single week, every single month when you're not paying it to a landlord. I think a lot of people look at that as a huge negative because they feel as though it's lost money when you're paying it to the rent.
Sorry, man.
No, I just wanted to...
As someone who was a tenant for a long period of time, I just like the freedom of being able to do stuff to the property and add value to it and paint things and put stuff up on the walls and destroy things as I can seem to do with
high pressure hose and roof down.
Kick the ball in the house, put a hole through the wall and then do a handstand into the wall and smash it and then not fix it. Like that sort of thing.
You were the devil tenant, weren't you?
No, I'm talking about my own home. I was the perfect tenant. I'm just trashing my own joint. But obviously property has been used to generate wealth for generations in Australia as well. So, the average baby boomer or person that bought a property, for example, for $1 million 20 years ago would most likely be sitting on a $2 million property right now, which will completely change their future.
I think the other best thing about buying your own home first, depending on where it's located, is it can actually be a more economical decision. It might be more affordable to own a property and pay a mortgage than it is to actually rent in that particular area. I think about apartments, I think about regional towns, I think about some properties in capital cities even at the right time where it's actually more affordable to own and pay the mortgage than it is to pay the rent there. So your cost of living goes down in that situation.
Yeah, I think that's really important. For many people in many parts of Australia, they could go buy a property for $600K, be sitting on, 500 grand worth of debt after their deposit, and in current interest rates be paying sort of 25 to 30 grand a year in interest, where in the same market you might be paying 30 to 40,000 bucks a year just to rent it. So in many, many places outside of Sydney and Melbourne, that can work extremely well.
But in most instances, this isn't the case. Where most people live in Australia, which is Sydney, Melbourne, Brisbane, a lot of the time it is more expensive to actually to own the property than it is to rent those properties, especially in those markets like Sydney and Melbourne, where over 10 million Australians actually live at the moment. So that is probably unrealistic based on the current market with where property values are and where interest rates are. And I think that becomes a negative then as well. If it costs you more to own that property than it does to live in that location, one of the things that we really love and what I started with is investing into a market that makes more sense and then renting in an area where you want to live, where it's actually more affordable to be renting there.
Another one of the negatives for me with buying my own home is it's not income producing. So it's just a fixed liability and expense at the end of the week. And most Australians would chuck it in the asset column because it grows in value. But the banks see it as a bit of a negative from that perspective when you're going to buy your next property, which is why another negative is it can kind of hold you back. A lot of people, and you were talking to someone this week about this, can get really fixated on paying down the debt on their own home. And all of a sudden it's 15 years down the track and you're in your late 40s and you're trying to scramble on the way to financial freedom by 50 or 60. So there is a double-edged sword to investing in your own home first and then investing in assets as well.
Which comes to the next negative, which can be either a negative or a positive depending on where you are, which is timing. We all know that property runs in cycles and, there's an Australian cycle, but then there's multiple cycles within Australia and even in individual cities as well. So it really depends on which stage of the real estate cycle you're in and where you're living as to whether or not you should really be buying your own home or investing, because if you're buying at the peak of a cycle, that's going to hold you back even more from being able to get into the investment journey, because generally you're paying so much in interest and you can't actually save that additional money. For example, if you have a mortgage of $2,000 per month, I bet a lot of people are like, where are you living? That seems like a really low mortgage at the moment. But, you have that. And if you've got no income, then that's coming straight out of your savings to pay for that mortgage. Whereas if you've got an investment property, you'll be able to rent that out, and maybe you can get $1,500 per month in rent. So you're able to have a much faster savings rate if you do invest first over buying your own home, which I think a lot of people forget about, because once you get into your own home and you're paying that mortgage, it's really reducing your household savings rate, and that's inevitably going to hold you back from being able to buy an investment property.
Which I think perfectly leads me into the first positive of investing, and that is the fact that you can work towards financial freedom and creating choices in your life sooner by investing first. As you said, if you're getting extra income, then it's making you look stronger to the bank. If your living expenses are down and your income's higher, it means you've got a surplus to put into whatever your thing is. For us, it's property. For other people, it's stocks, crypto, commodities, super, whatever you want to do. Having a surplus, investing it over a 15 to 30 year period will create freedom and choices you can't imagine.
And for me as well, like a massive positive about investing, like I'm a really logical and pragmatic person. Like you get to choose the best location to invest in. You get to target the markets that represent the most value. I got a lot of friends that live in Sydney and down in the Illawarra region at the moment, and they're looking to get into their first home, and that's their number one goal. But looking at where those markets are in terms of their real estate cycle, they're sort of, at, or if not very, very, very close to the peak where, you could potentially be looking into another market like Brisbane or Perth that represents more value from an investment perspective. So you're not making those emotional decisions based on your geographical location. You're able to just focus on the data and the logic, and that'll help you get a better return on investment, which once again fuels that being able to create financial freedom, be able to get those choices a little bit sooner.
I actually really love that. And one of the strategies that if people do invest first, like I did and you did as well, then you can actually sell down those properties in the future to get your dream home. So one of our clients and your best mates, Davo, obviously wants that home in Sydney or up here on the Sunshine Coast, but it's going to come with a $1 million plus price tag. And so because he couldn't afford it, he's gone out and bought, 3 investments, and the plan will be in the future to add value to those properties, probably sell them down, end up with a significant chunk in the bank that he couldn't have saved from his wage, especially with like 2 young kids now.
Yeah.
And, at the end of the day, he'll be able to leverage into what he really wants, but he's just had to delay that gratification a little bit to get there.
And sometimes if you've got a really good income, you don't even need to sell it. You can just leverage off the equity from the investment property as well.
Yeah, exactly.
Another thing is just the history, and this works for both a positive of buying your own home or an investment, is just the historic performance of Australian real estate has been kick-ass.
Yeah.
What does Simon Priestley say about 8.2% per year over the last 50 years?
Yeah.
That's significant growth, especially when you think about the leverage where you're putting in a small deposit to purchase a more expensive home, and then having that expensive home reaping the benefits of those long-term capital gains.
Some of the negatives associated with investing first, though, is obviously you've got to keep renting, which is basically what I did when I started investing. And it also puts a delay on getting that dream home and that gratification that you're looking for, because a lot of Australians do go out there and buy that first property first. And if you're in your 20s and 30s doing that and you're investing and sort of living where you can rent, and your friends are going out there and buying these nice homes or building them and fixing them up, there can be a bit of that keeping up with your mates and the Joneses thing and feel like you're missing out on something. And so it can be really difficult to sort of see people setting up that when you're sort of delaying that. And I know personally, I delayed all of my gratification for at least 10 years, but ultimately was able within 10 years to get into my dream home by selling down a bunch of assets, like I said before.
Yeah, when most people start buying properties, it's at that stage of life. Sorry, not most people, but a lot of people, it's getting to that stage of life where you are having kids, and it's you want to make sure that you've got that safety and security for your children, and you want to have a house in a good area where you can send them to good schools and be surrounded by good quality demographics. And, when you're renting, you don't have that freedom of choice as much unless you're willing to pay a lot for rent as well. So, putting that dream home on the back burner, just doesn't feel as good, because buying investment properties doesn't feel anywhere near as good as buying your own home, because it comes back to that more logical, future-focused decision as opposed to like focusing on what I want right now. Like the delayed gratification is really hard to just work through over a longer period of time.
I think one of the major negatives for me with investing has always been like the maintenance side. Like if you're going to buy a property for 500K today and it grows by 4.8% for 15 years and is worth $1 million, then you're probably going to have to spend $50,000 plus over that 15 years to maintain that property. And so obviously that sort of eats into your cash flow week to week and it hits your budget. And especially when you start out, like normally most people aren't going out there and buying a $2 million perfect property straight away. And so I've had the experience where like you're constantly getting that call, and because it's an investment and depending on the market in Australia, you're only legally allowed to go to the property so many times a year yourself, or even, if you're a borderless investor, you don't go to the property. Those maintenance costs that you could easily do yourself or get a mate to do end up stacking up a little bit over time and sort of eating into your cash flow too.
At the end of the day, there's no one size fits all. Like it really depends on your personal situation, your stage of life, where you're geographically located and where you actually want to live and own your own home, and actually where you want to invest and start building wealth for the future. So it is really a subjective decision at the end of the day as to whether it's better for you to buy your own home versus an investment property. And what we would love to offer everybody that's listening today, if you are considering purchasing your own home or an investment property within the 12 months and you're not 100% sure as to what you should do, then we'd love to offer you a free strategy session where we can talk about exactly where you're at right now, where you're looking to be in the future, what's currently holding you back, and we can help you create a clear action plan as to what you should do next. You can then take that information and go and smash it yourself, or if you choose to invest, you can become one of those few clients that we work with each month. If you'd like to book in one of those strategy sessions, please head over to our website, www.pumpedonproperty.com, and follow the free strategy session links to book in a call with myself, Simon, or my brother, Ben, where we can talk about all of those things and put the right plan in place moving forward so we can help you get from where you are today to where you want to be in the future. Because at the end of the day, guys, we just want the best for you, and we want you guys to have a nice, easy journey through life and obviously make the most of these opportunities when they come up. So thanks so much for listening today, guys. We really appreciate it. Give us a thumbs up. And if you haven't already, subscribe to the YouTube channel.
Woo!
That's a wrap.
That's a wrap.
That's cool, bro. Yeah.
Sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.